Okay, so this problem is going to ask us to accrue payroll and then post the journal entry and then make the subsequent payment to our employees on the payroll date. So it says that CRT has weekly payroll of $12,500. December 31st falls on a Wednesday, and CRT will pay its employees the following Monday, which will be January the 5th, for the previous full week. We assume CRT has a 5-day work week and has unadjusted balance in salaries expense of $620,000, which we can see here in our T account. Part A asks us to record the adjusting entry for accrued salaries on December 31st. So the reason that we want to accrue at December 31st is because we want financial statements on December 31st. So the fact that our employees have worked and we therefore owe them some salaries for Monday, Tuesday, Wednesday, we need to make a journal entry so that that will be included in our financial statements. So this journal entry will be for 12/31, and the journal entry to accrue salary expense will be salaries expense and a credit to salaries payable. Okay, so in order to calculate how much, we know that $12,500 pays them for 5 days. So to figure out how much we pay them each day, we can say 12,500 divided by 5. And when we do that, that gets us our daily amount. So every day we pay these employees $2,500. Well, 3 days have gone by, Monday, Tuesday, and Wednesday. So if we multiply 2,500 times 3, we can get all 3 days, and we can know to accrue $7,500. So let's go back through and label these so that we know what they are. This is a 5-day amount that we pay our employees. So we divide by 5 days to get amount that we pay them per day. Then we multiply by the 3 days. That is Monday, Tuesday, and Wednesday. And that gets us our total to accrue. All right, so we're going to accrue $7,500 for salary expense, and we're going to show that we owe them in salary payable. So that's our journal entry to accrue. Then it asks us to post that. So for salaries expense, we're going to post it as, salaries expense is over here. We're going to post it as a debit because we debited it right here. So we're going to say December 31st is $7,500. And so our new balance will be equal to, if we have a debits, we just add. Debits and debits we add. If we had debits and credits, we'd subtract. So 620,000. Both of these are debits, so we'll add those together. So our new balance is 627,500. All right, so we've now posted that line. Now we need to post this line. So we credited salaries payable. So we're going to come over here to salaries payable, and we're going to say 7,500. That was the cat that did that. I'm so sorry. Salaries payable of $7,500. So our balance is credit of $7,500. Okay, so we've done A and B. So letter C says that we're going to record the journal entry for payment of salaries made on January the 5th. So now we've made our financial statements on Wednesday, December 31st, and now it's Monday, and we want to pay our employees. So when we pay them, I like to start off with the easiest part, and that is cash. How much do we owe our employees? We owe them the entire $12,500, so that's how much cash we're going to pay them. All right, and then we need to turn around or get rid of the salary payable because we no longer owe them because we've just paid them off. All right, how much did we used to owe them? We used to owe them $7,500. Now we don't, so we need to get rid of that $7,500. All right, now this next part is salary expense, and that is because we now need to expense what happened on Thursday and Friday. So you remember that each day we pay them $2,500. So Thursday and Friday will just be 2,500 times 2 for Thursday plus Friday. Now, you could have calculated it that way, or you could have said, hey, I know that it needs to equal 12,500 minus 7,500 to get me to 5,000. But in accounting, it's best to calculate it by what you know rather than plugging it into a journal entry. So it is safest to say I pay them $2,500 each day and I haven't made my expense for Thursday and Friday. So this is my expense for Thursday and Friday. All right, so let's go in here and just label these so we make sure that we know what these stand for. This journal entry was to accrue salaries expense. That's what it did. And this journal entry was to record payment of salaries. So that completes everything. If we were to look at what that now did to our journal entry, or to our ledger accounts rather, I have now put in an additional $5,000 here on, what is this, January 5th, I put in another $5,000. So that would change this. I'm not going to update that right now, but that would add $5,000 here. And look what this did. When I debited salary payable, that got my new balance down to 0, which is what I wanted because now I've paid them all the way off. So I'm finished with that accrual and I paid them on January the 5th. So let me know if you have any questions. Thanks.